Comparing VOO and VTSAX is essential for investors looking to diversify their portfolios with VanguardS popular funds. VOO is an exchange-traded fund that tracks the S&P 500 index, comprising 500 of the largest publicly traded companies in the U.S. On the other hand, VTSAX is an index fund that tracks the CRSP U.S. Total Market Index, covering virtually all publicly traded U.S. companies. The key difference between VOO and VTSAX lies in their coverage and investment strategy. VOO focuses on large-cap stocks, while VTSAX covers the entire U.S. stock market, including small-cap and mid-cap stocks. This means VTSAX offers more diversification, but also comes with slightly higher risk due to its exposure to smaller companies. In terms of fees, VOO has an expense ratio of 0.03%, while VTSAX has an expense ratio of 0.04%. Although the difference is minimal, it can add up over time. Historically, both funds have performed well, with VOO closely tracking the S&P 500 index and VTSAX tracking the broader U.S. market. When it comes to choosing between VOO and VTSAX for long-term investment, consider your investment goals and risk tolerance. If you prefer a more conservative approach with a focus on large-cap stocks, VOO might be the better choice. However, if you want to diversify your portfolio with exposure to the entire U.S. stock market, VTSAX could be a better option. Ultimately, both VOO and VTSAX are solid choices for long-term investors. It is essential to evaluate your individual financial situation and investment objectives before making a decision. By understanding the differences between these two funds and considering your personal preferences, you can make an informed decision that aligns with your investment strategy.